Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
Good Saturday morning for everyone. Hope you're got your cup of coffee or a cup of tea and ready to listen about what God has to say about financial situations. And we just want to welcome you. This is the first show of the new year, so Happy New Year. We are missing my counterpart, Jesse Hamilton. We hope he's getting better, dealing with the virus that's going around all the place. We just want to thank him for helping us prepare for today's show. And we're glad that you're here. Today in today's show, we're going to actually go to our mailbag. You can actually send us an email during the week if you come up with questions you'd like us to answer on the show. That is email is radio@spendlifewell.com. That's radio@spendlifewell.com. You can send your questions in. But on today's program, we're going to talk about a number of different things. A lot of things have been happening in the past week that we need to discuss. And we're going to go and talk about what the Federal Reserve minutes from December tell us about the economic health of our economy, the stock markets and such. And then we're also going to talk about some goals you may need to set. I know many of us we set New Year's resolutions at the beginning of the year. We're going to talk a little bit about how you keep those New Year's resolutions. But first, I do want to go to our mailbag in this segment. And we've received an email from Wendy and Kyle. And her question is, as I keep getting promoted and receiving a higher salary at work, which is good, congratulations, I find myself spending so much more money. Do you have any tips to help with my spending habits as my income increases? I want to enjoy what I've worked hard for, but I don't want it to be a problem. Well, that's a great question, Wendy, and I appreciate you sending that in to us this last week. One of the things that we must realize is that the message that the world sends to us is different from what the Bible says about how we should manage our finances. And the world says, fund your lifestyle, go into debt if you need to do that. If you have anything left over, why don't you save a little bit for a rainy day? And then finally, if you're so inclined and so generous that you've got your needs met and all of your heart's desires are met, maybe you'll give some away. And what we find is God's plan for our finances is exactly the opposite. He wants us to give first. He wants us to save for the future. He wants us to then use debt prudently if we have to use it at all. And he wants us to then fund our lifestyle. Now, that's just the 180 complete reversal of what the world tells us. We just come through the holiday season, and my goodness, we cannot turn on the television without seeing a commercial about something that we need, right? Whether it's a new car or a pretty sedan that we put in the driveway with a bow on it for our spouse. We need it, and we deserve it. Well, that's not what God's plan is for our money. So Wendy, one of the things, and a good quote that I remember from some of our friends at MoneyWise, particularly Rob West, but MoneyWise, which is on 3 to 4 p.m. every day during the weekday here on the bridge, and that is, too many people spend money they haven't earned to buy things they don't want to impress people they don't like. And when I thought about that, I thought, well, yeah, that's right. Why do we spend the money we do? So as you're getting these raises, one of the first things that I would encourage you to do is simply increase the percentage of your paycheck that is going to your workplace retirement plan. This is something that's really important. Because that right there, it goes on autopilot. You forget about the raise, but you begin to see your 401k gradually rise up and grow. And there's a couple of verses today that I had. Our verse today is we remember the verse from Matthew 6:24. No one can serve two masters, for either he will hate the one and love the other, or he will be devoted to the one and despise the other. You cannot serve both God and money. If you remember from our program back in December, in the middle of December, we talked about some early translations said mammon. We talked about that. Go back and listen to that show. So you can find that on our website, which is spendlifewell.com/radio. But you can listen to that program again. And then I'm also reminded that in Proverbs 13, wealth gained hastily will dwindle, but whoever gathers little by little will increase it. And of course, Wendy, there's no better place to kind of get the right perspective about our money is coming from the Ten Commandments. Exodus 20:17 to be exact. You shall not covet your neighbor's house. You shall not covet your neighbor's wife or his male servant or his female servant or his ox or his donkey or anything that belongs to your neighbor. And so we just want to have the right attitude about the wealth that God has entrusted to us, because our goal as believers is to be a good steward. And we've talked about this a number of times on the program. But Wendy, as you're thinking about this, you're getting raises and congratulations. You want to make sure you have the priorities. So priority number one, I would want to make sure that, and I skipped this earlier, I would want to make sure that you are rejoicing in that and worshiping the Lord in that. And maybe you need to increase your tithe a little bit. Um, I've talked on this show many times about how important it is to give first. And for some of us, that act of giving is an act of obedience, because we are commanded to do that in Scripture. But for me personally, and for many of you listening out there, that act of giving is an act of worship. And I think it's so important to do that, because I think it puts the right perspective on the wealth that you've been blessed with. And that is, making sure that we glorify God with that up first. I mean, God doesn't need our money. God doesn't need our money, but I like to say, thank you, Lord, and to give some of that back. So do that first. Increase your retirement savings from your workplace work plan, 401k plan, 403b, depending on what you have and where you work. But make sure that you also are saving a little more. Maybe you need to build up your emergency fund. Those are all good things to prioritize. And then after that, yes, absolutely, you should enjoy a portion of what you receive, and that's awesome. And I want you to do that. God wants us to have pleasure from what He's blessed us with. So make sure that those four things are happening in your mindset and your walk. You want to pray about that. Pray about where God wants you to do that. And we're reminded of Deuteronomy 8:18, which says, "You shall remember the Lord your God, for it is He who gives you power to get wealth, that He may confirm His covenant that He swore to your fathers as it is this day." Now, it's real important. I'm going to read that verse again. You shall remember, this is Deuteronomy 8:18. You shall remember the Lord your God, for it is He who gives you the power to get wealth. Now, this is something that in classes that we've taught over the years, this is something that a lot of people struggle with. And I was sitting in a local church in the Austin area, and I was doing a program on building wealth and things of that nature, the biblical way, because we know there's more than 2,300 verses in the Bible dealing with money and possessions. And I had a fellow in the audience, and he raised his hand and said, "Look, I work hard for what I earn, and I earned it." And I didn't disagree with him. I said, "Yes, you have worked hard, but who's enabled you to do that? Who's given you the power to work? Who's given you the opportunity to create a company or to get a job?" We just want to remember where all that comes from. And I just think that that's really important to remember, Wendy, as you're looking at these promotions and your bigger paychecks, and that you put that in the right perspective. So, when I think about these things, um, when I'm thinking about what are the priorities for the new year, I know many folks have made resolutions to do that. And I'd love to hear what your New Year's resolution as it becomes around your finances. You can call us in the studio at 452-1120, 452-1120. If you are at your home and you're trying to maybe see what we look like in the studio, you can go to live stream We have that going. You can go to our radio page and you can find our social media channels. That is spendlifewell.com/radio. And you can connect with us on Facebook, watch the program live, or in a replay later on. So 512-452-1120, call in. We want to hear what your New Year's resolutions are. And uh, let's talk about those things. Now, when we think about resolutions, there's an old adage that it takes several days, 21 days to create a habit, right? And whether that's working out more, maybe it's getting control of your finances, maybe it's I want to get out of debt, maybe it's I want to save more for retirement. Whatever that goal is, number one, I think you need to pray each and every day about that goal because if it takes 21 days to form a new habit, most New Year's resolutions are broken within 2 weeks. So we got we got a big disconnect here, right? We got a big disconnect here. We need 21 days to create a good habit, and then we also most New Year's resolutions are broken within 2 weeks. I don't make not a lot of New Year's resolutions because I don't want to use the new year as a crutch to that's when I'm going to make changes in my life. I want to make set goals all throughout the year for things that I think are important or what I feel God leading me to do. And that's one thing that's really important. So whatever your New Year's resolutions are around finances, I hope you'll call us up and share those with us. 452-1120. We will get to those questions as soon as possible. We'll probably go to our mailbag here in just a minute. But anyway, I think that setting those New Year resolutions and following through them, you need someone to help you. I think prayer is important. I think it's important to have an for accountability partner because I tell you, if I set a goal and I don't tell anyone about it, I'm not accountable, and no one will never know if I never met that objective. Now that's kind of funny. If we just set goals and we don't tell anybody about it, I think it's important that you tell someone about your goal. Maybe it's just, hey, I want to make sure that I'm tracking my spending. That's real important when we think about one of the most important concepts um, that we're talking about. And thank you for those folks that are chiming in on chat via the live stream. We appreciate that. And one of the things I think about is you have to know what you're spending, and you can't really understand what you're spending without writing it down. And my good friend John, who I think's listening this morning, my good friend John taught me that I just needed to write it down. That means know where every dollar goes of the money that you receive. Now, as a financial advisors, we don't care where you spend your money. And a lot of times we get questions about, how much should I be spending on rent or food or things? I don't know. It's your money. I don't really care if you go to Starbucks 5 times a day, but you need to know exactly what you're spending. So you need to track that. And one of the easiest ways to do that is just simply to write it down. And so, anyway, as we're coming up on the next break, I want to tell you about a special program today, right after our show at 9:15. And you can go to spendlifewell.com/radio and you can register for that program. We're going to give a live market update and have some in depth questions and analysis about what's going on in the market. And, we want to make sure that we get your questions answered. That's a time for you to interact live one-on-one. So you're not on the air necessarily, but we'll give you our annual update. And we do that every month, first Saturday of the month, about 9:15. So I want you to know about that. Also, call us in the studio at 452-1120, 452-1120. And when we come back, we're going to talk about what happened in the markets this week and what the Federal Reserve minutes tell us about what the future of the market might look like going into 2022. Call us in the studio, 452-1120. We'll be right back in just a moment. Last segment, we were talking about New Year's resolutions a little bit, and we are taking those calls at 512-452-1120. We are glad you have chosen to join us today, but Let's jump into the next segment. We're missing today, of course, my counterpart and co-host Jesse Hamilton. Jesse is out with the bug that's going around. Both he and his wife have caught that. In fact, we've had several people in our office catch that in the last few weeks over Christmas break. But we pray for them and ask for the Lord for quick healing. And thank you for your prayers there as well. So a lot of financial and economic data came out this last week. Number one, we got the minutes from the Federal Reserve meeting of December. Now, this surprised markets. Now, I don't know why, but a lot of times markets will move on news and they react to the news. But the Federal Reserve has been forecasting these types of things or dropping hints for quite some time. Now, one of the big things that the Federal Reserve has been concerned about is finally they've been concerned about inflation. Now, inflation last month was on an annual pace of about 6.9%, which is red hot. We haven't seen that type of inflation since the 1980s. And that means prices for goods are going up. If you haven't been to the grocery store in the last several months, you're going to be surprised when you go. The cost of everything is up quite a bit. Especially we saw last month, we saw the price of automobiles tick up again. You can't really find a new automobile because of supply chain issues and shortage of chips and things. But when you do, you be prepared to pay a premium because they are in hot demand, whether that be new or used type cars. So why the big conundrum this week? The S&P 500 ended the week down 1.87%. That's 1.87%. The NASDAQ index was down about 4.53%, which is a big move. And tech stocks that are on the NASDAQ tended to suffer just a little bit more than the large cap companies that are on the S&P 500. But what was the news there with that? Well, number one, the Federal Reserve confirmed that they are going to speed up their tapering process. And sometimes in the markets, when the Fed gets involved, when the Fed doesn't save us from our portfolios from a market downturn, we have what we call a taper tantrum. Now, the Federal Reserve over the last 2 years, really now, coming up on 2 years, has been buying mortgage-backed securities and treasuries at the pace of about $120 billion a month. Now, this is important, and I don't want to bore anyone, but this is important because what it is creating liquidity and more money in the financial system. And they have started slowing that down. They're at a pace where they're going to be completed, where they will do no more buying of these types of bonds come March. And that's going to create less liquidity in the markets, less momentum potentially to have the markets go up. Now, combine that with the fact that the Federal Reserve this time in their minutes in December said, we anticipate we might have 3 interest rate hikes for the overnight Fed fund rates, 3 interest rate hikes in 2022. Now, back in December or before December, in the previous meeting in September, the consensus was, well, we might have 1 or 2. Now, we listen to the Federal Reserve press conferences and we read the minutes, and it really is trying to read the tea leaves. We try to read between the lines and try to figure out what they're really saying. And when the minutes came out, the market reacted. It was no surprise to us as financial advisors because they had been forecasting this for some time. But the market loves to react to different things, and we can't control that. So we can only have a plan for how we're going to manage our money. And so they announced they're going to have interest rate hikes, which are going to cause lots of problems for stocks. Stocks generally do not do as well when the interest rate is rising, and in particular, tech stocks. Now, I won't bore you with a conversation about valuations and different things and how that impacts those stocks, but you can expect that the stock market, with interest rates rising, with the Federal Reserve tapering those bond purchases, and then eventually they're going to have to unwind the balance sheet, which is the third thing we have to be concerned about, meaning that they're going to have to sell the bonds that they have. That's going to create even more problems for the stock market. There will be headwinds going into 2022 and on. And then we run the risk when interest rates rise, you run the risk of having another recession. This last week, yesterday, the Bureau of Labor Statistics released that non-farm payrolls increased 199,000 jobs in December, and that was far below their expectation. The expectation was around 450,000 jobs created. So here we are. We're in a season where jobs are being created in abundance. I mean, we can't go out anywhere and realize that retailers, that restaurants and things, they're short staffed. Folks, if you are a young adult and you're able bodied, you can find a job. And I think that if you need to get a job, you can go out and find one. They're out there. But this is well below what we expected. 199,000 jobs. The unemployment rate dropped to 3.9%. And what we see there is these are things that say to the Federal Reserve that the economy is roaring, especially the unemployment rate. The jobs report is concerning. That leads me to believe with the outbreak of Omicron variant that employers may be pulling back, but really these numbers come from before the Omicron really got out there and spread. Okay, so this is important, and we also have to realize that the Fed is always behind. The Fed is notorious for being well behind what's really happening in the market. So the Fed has said that they're going to have probably about 3 interest rate hikes in 2022. I think that there's going to be a fourth, but in reality, I've often wondered, does the Fed have the guts to actually do this? I don't know. I don't have a crystal ball. Oftentimes, when clients come in, they want to know what the market's going to do next year. I used to have a fake crystal ball that I put on my desk just to be funny. And the answer is we don't know. But how do you manage your money in an environment which can be extremely volatile? The markets were very volatile this week. You've got interest rates on bond funds going up quite dramatically, which means that the value of those bond funds are going down. And so, how do you do that? What do you do? Well, we here in our office, Clear Vista Financial is the name of our firm. You can get there by going to spendlifewell.com. And we manage money a little bit differently. Number one, first and foremost, we want to look at people's wealth through the lens of what God has to say about our finances. That's so important to us, and we really like to work with folks that have that and share that same belief. That's so important to us because when we're on the same page and we know that God's given us instruction for managing our finances, we like to do it that way. But secondly, we are active risk managers and active investment managers, and we make sure that when the headwinds of the market come at us and we are trying to prepare for the upcoming days and weeks, we want to make sure that your portfolio is properly balanced. Maybe you've got questions about your portfolio. It's the end of the year, beginning of the year, and a lot of financial advisors out there are giving advice about buying this, selling that, or maybe you've never even heard from your financial advisor in years. We'd love to talk to you. Give us a call here in the studio. We'll talk about it on the air. 512-452-1120. That's 452-1120. Or shoot us an email, radio@spendlifewell.com. I'll check those emails during the break and bring those up for you. And I'm also just want to remind you once again that at 9:15 today, 9:15 Central, we're going to have our monthly webinar update where we talk about what's going on in the markets. We'll talk about our approach to managing your money and protecting your investments as you work hard for them to build up. I know one of the things that's so challenging for folks, especially as they get near retirement, is they begin to worry. They begin to worry about losing it all. We all can go back to the days of the most recently, 2002, 2003 timeframe, 2008 and 2009. Wow, those were some times that the market went down by almost 50% or more. And, we're seeing that those fears come up from time to time. And so, we want to help people navigate that. But the way that we manage money helps our clients navigate some of those fears. Um, we react and respond to the data that's out there. We don't necessarily follow the modern portfolio theory that's out there in the world about, so many of the advisors out there follow that, but they follow that for a reason. That modern portfolio theory was really a theory developed on a PhD thesis by Harry Markowitz in 1952. And the data that he made his theory on is based on old data, and the majority of the financial industry follows it. And even Dr. Markowitz later on said, I never intended for the financial industry to widely adopt this theory of mine based on my dissertation thesis, but they have. And the reason that they do that is it makes it easy, in my belief, it makes it easy for them to sell you stuff. They put you in a nice, pretty pie chart of diversified investments, they say, and say that, if you have a long investment horizon, you'll be okay. So it's easy for them to sell you stuff. And the second thing, and this is going to be contentious for some of my financial advisors out there, the second thing is it limits the liability of the broker dealer. And that's important to know. And you have to ask yourself, is the advice that my advisor is giving me, is it in my best interest or is it in their best interest? And a lot of times, folks, we like to say that a lot of our financial advisors out there, and there's a number of Kingdom Advisor certified Kingdom advisors in Central Texas and North Texas and all around the country. And I would put my trust in those folks because I know that they are following God's wisdom for your finances. But it makes it easier for you to sell you stuff, and it limits their liability, because when you go to a typical financial advisor, they have you fill out a questionnaire. All right. Some of you have done this. And they basically are asking questions about how much risk can you tolerate? Or as I affectionately say, how much of a roller coaster can you handle? Are you capable of handling the lazy river, or do you like the cliffhanger? And most of us are not ready to ride the cliffhanger, right? We've been through where we've invested in our portfolios for a long time. We've had ups and downs, and we're not ready for that. But they do this questionnaire. They come to you and say, okay, based on your questionnaire, which we're going to keep on our file, you are a moderate investor. And then they create a portfolio, a pie chart of a mixture of stocks, bonds, maybe international stocks and bonds. And they say, here you go. The problem is that Harry Markowitz PhD thesis says that we should never have a bear market, which is a decline of more than 20%. We should never have a bear market more than once in every 300 years. Folks, we've had 17 bear markets since the Great Depression. It's not a question of if we'll have another bear market, it's a question of when. And is your portfolio ready to weather that storm? Because nothing's worse than you're getting close to retirement. You have a bear market and you're having doubts about whether or not you can retire. Call in though. Let us talk to you about your situation. Maybe you got some investments in there that have been recommended for you and you're just not sure. You want a second opinion. Give us a call here in the studio at 452-1120, 452-1120. And we'll answer that question on the air. Or if you don't want to come on the air, you can send us an email at radio@spendlifewell.com, radio@spendlifewell.com. So when we're about to come up on a break here in just a minute, but I wanted to remind you of our special webinar. We're going to have them every month on at 9:15 following our show, where we will go over the weekend of market returns and talk about what's been happening in different sectors and things. And we will discuss what our view on the market is and the risk that's out there. For example, last year bonds on average returned about -6 or between -6 and -7%, depending on the duration of the bond. So if you're a typical balanced portfolio guy or gal, you did not make a whole lot of money last year. And so you may be wondering because the stock market went up by over 26%. So we'll talk about that. We'll answer your questions. But if you've got a question today, give us a call. Jesse's not here. He's out ill, and I'm having to talk to myself. So I'd love to talk to you. Give us a call at 512-452-1120, 512-452-1120. And when we come back, we're going to talk about some of the things that you need to consider as you prepare for retirement. This is a large topic of a bulk of what we talk about here at on the Spend Life Well show is preparing for some of those goals. But we're going to talk about preparing for the phase in life we call retirement. It's supposed to be a fun time, right? So give us a call in the studio. We want your questions, 452-1120. Go on to our website, spendlifewell.com/radio, and register for our webinar this morning after the show. We will be back in just a moment where we'll dip into our mailbag and finish up our final segment. Thanks for joining us today on the Spend Life Well program.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
All right. Welcome back to the Spend Life Well program. I'm your host, Certified Kingdom Advisor Mark Trice. We're glad that you've taken a few minutes to join us today. It's our first program of the new year. We're excited about what the new year brings and what we can talk about here on the Bridge Austin on the Spend Life Well show. So I want to start out by going to our mailbag. We got an email the other day from Ron in Cedar Park. Ron in Cedar Park was asking that this last fall, I switched jobs, and he's really happy with the opportunity. What should I do with my 401k from my old company? I've saved almost $100,000 in it over the last several years. Good job, Ron. And that's a good start. You didn't tell us your age or anything, but I assume that you're well on your way to having a good financial future and saving for your future retirement goals. Ron, I'm reminded of the movie Office Space. Now, that's been a long time. In fact, I think they filmed a lot of it right there in Austin. But in the movie Office Space, there was a character in the show that really had been let go from the company many years ago, but he kept showing up for work. And the most important thing to him was his stapler. I think it was a red swingline stapler, and sales of red swingline staplers went up quite a bit after that movie. But that was what was important to him. So when people ask me that question, I say, okay, yes, you can leave your workplace retirement plan from your previous employer at your previous employer's plan, but you're no longer there, and you're not in the groove of the things that are there. Maybe that employer plan had very limited investments, and so Ron, you have to ask yourself, should I move this money over to my new workplace plan, or can I roll it over into an IRA, an individual retirement arrangement? If you want to use that at your next barbecue, you can tell people and quiz people and say, what's an IRA? And they're going to say individual retirement account. And you say, the tax code says individual retirement arrangement. So an IRA is an account where it's a qualified retirement plan where we can put our savings in. You can roll over those funds into an IRA where you have complete control over them. You can roll them over into your new employer's workplace plan where you can invest in the offerings that they have. But you want to make sure that you look at that new plan, look at the offerings they have. Do they have a diversified basket of stocks and bonds in their or stock fund, mutual funds? Well, some plans are better than others. Most plans are going to have basically the big three. They're going to be loaded up with large cap mutual funds. They might have a smaller mid cap fund. They're going to have a bond fund of some type. And then they're going to have a series of what we call target date funds. And that is the default option if you don't select anything. So I'd be careful about that. Target date funds, a lot of people are misinformed. They think that the 401k plan advisors are actually looking out for them, and that is not true. Your responsibility, and this happened back in the 1970s when Congress created the ERISA laws that shifted the responsibility in the past. In the past, the responsibility for your retirement was put on the employer, and a lot of times these were done through pensions. You really don't see a lot of pensions anymore, right? So when ERISA came out, that law changed things and shifted the responsibility of your retirement savings from the employer to you. And so it's important that you're responsible for understanding what's there. So back to your question, what should I do with that money? Well, you've got three options, really four, and maybe a fifth one. The fourth option is you can cash it out. Please, please, please don't do that. That's bad because you will be taxed on all the value of that $100,000 that you said. You pay tax on it. It'll be like you got a $100,000 raise to Uncle Sam. And if you're under 59 and a half, you're going to pay an additional 10% penalty on that. So depending on what your tax bracket is, you could give half of it to Uncle Sam. And you've been working hard, that money is tax deferred. Or if you're participating in a Roth 401k, that money is tax free if you follow the rules. And so you have to be careful about that. So three options. Fourth option, we're not even going to consider because that means destroying up to half of your wealth by making that move. But you can keep it where it is, Ron. Okay. You can keep it where it is. You can roll it over to your new employer's retirement plan, or you can roll it over to your own individual retirement arrangement or IRA account. Okay. And if you do that, you want to consult a financial advisor, you can give us a call in our office. Just go to spendlifewell.com and you can get our number there. I'll give that towards the end of the show today, but you can do those three things. And congratulations, Ron, on building up your wealth so well in that 401k at your old employer. I wish you the best at your new job. Hope that brings you much success and much enjoyment as you're working there. So you can give us a call here in the studio at 452-1120, 452-1120. We'll talk to you live on the air and give you a chance to ask your question of our financial advisor. And today, that's me. Jesse's out ill. We'll wish him well and speedy recovery. But let's go back to the mailbag. I've got another question that came in. It's John in Temple. John in Temple, and his question dovetails into what we wanted to talk about in this last segment here. His question is, I'm planning on retiring the next 5 years. Will the stock market drop when the next COVID variant comes out? I don't want all my hard-earned savings to go away. And we kind of alluded to this a minute ago. We were talking about something related. We cannot predict the future. And this is one of the biggest beefs I have with the financial industry, because when you purchase a stock or a mutual fund, especially, and they give you a prospectus, and that prospectus says, oh gosh, in the last 10 years, our fund is up 120%. And in the last year, we're up 15%. And you're thinking, my goodness, that's awesome. I want that. And we fall into that trap. And this is perfectly legal from the mutual fund companies to give you that performance data, but it does not mean that that is what will happen for you in the future. Right now, we are very near all-time highs in the S&P 500. All-time highs. And it can continue to go up, but it might correct. And with the headwinds that I described to you in the previous segment of our show, we have to be concerned. So you don't want to follow willy-nilly into pumping your money or dumping your money into the stock market right now. You need to have a plan. And I'm thinking, a lot of people have FOMO, fear of missing out, right? I don't want to miss out. Everyone's making money. I want some of that too. Okay. Well, I understand that. That's a perfectly normal emotional feeling to have, right? Perfectly normal. But you have to be careful about that. I can't tell you the number of people that call our office when something is at an all-time high and at risk of coming back down. They want to jump into something, and we try to talk them out of it. And sometimes we just have to say, "I'm sorry, if you're going to do that, we really can't do that for you because we know the risks that are associated with it." And I just say that, John, you're thinking and asking the right questions right now. What all do you need to do? We have a guide that we can share with you of the things you need to be doing and preparing for as you approach retirement. And there's a lot of work, right? There's a lot of work preparing, getting your ducks in order, having a plan for how much income you're going to have. What can you expect? Because the number one question that I get from folks that come into our office and we try to educate them on these things is, where do I get my paycheck? And you're thinking, what do you mean? Where do you get your paycheck? You're not working anymore. Well, that's right. You've got potentially several sources of income in retirement. You've got potentially Social Security. And for those of you that don't know, if you're a married couple, there's over 22,000 different ways to draw your Social Security benefits. 22,000. You heard me right. 22,000. Which one's right for you? You need to talk to a professional that can help you with that and help you determine what is the best way to draw your Social Security. So we got Social Security, right? And we may have resources that you have saved up, whether it be in retirement accounts, in IRAs, it may be just in a checking or savings account, but you need to have a plan for how much you can safely withdraw over time. And we feel, and then you got to prepare for things like, how am I going to handle health insurance? Am I old enough to get on Medicare? And of course, the cost of that went up quite a bit this last year in 2022, and we want to help you navigate that. But the old adage that was out there by the financial industry, remember, this is the same financial industry that tells you to buy a pretty pie chart of stocks and bonds and forget about it. That's the buy and hold approach, or as we affectionately call it in our office, buy, hold, and pray. We are a faith-based financial advisor, so we do a lot of praying around the office, but that's not the type of praying that we want to do, that we hope that your basket of stocks and bonds just do well. That's not a good, sound investment approach. But there's an old rule out there, retirement rule, and it's called the 4% rule. And that was basically saying, the observation was that if you withdraw no more than 4% of your retirement assets every year, it should last over your lifetime. Now, the assumption there was that you hopefully will have appreciation in your portfolio every year, maybe a north of 5% or more, and you're only withdrawing 4%. Well, that was when that rule came around, when bonds were returning 7, 8, 9% annually. And the typical portfolio that we see that comes into our office is a portfolio that either has 60% equities, stocks, and 40% bonds, or more balanced approach, they say 50% stocks and 50% bonds. Well, I just described to you momentarily a few minutes ago that several of the longer term bond indexes were down more than 6% this year. And if half your portfolio is clicking off at a negative return, and you don't own the right mix of equities at the right time, and in our webinar we'll do after the program today, we'll tell you what performed best last year. We'll tell you that, and you'll be surprised. The sectors that did better than others may surprise you. So I encourage you to join us. You can sign up for that webinar at spendlifewealth.com/radio. And you can join us. We'll have a little fun. We might spend maybe 30 minutes on that. Hope if you're at a computer, please join us. And if you've got questions before we wrap up the show, you can come in at 452-1120, 452-1120. So going back to my conversation about the 4% rule, if you're withdrawing 4% or more, you may be dwindling your portfolio. You may be lowering your portfolio. And that's one of the things that the 4% rule was meant to do, is to say that unless you're living a very, very long time, that you won't be drawing down and destroying the corpus, the principle of your portfolio over time. And so that you can pass it on to our greedy, unwashed heirs, right? Well, that's changed. And now they're saying that really, in order to have a successful withdrawal rate, is something that you and your financial advisor need to address each and every year. And we do that in our office. We talk about how much you can withdraw over time. And we talk about that every year, because if we have a great year, why shouldn't you be allowed to bless others by giving, setting some of it alone and let it continue to grow, and also enjoying the fruits of that? That's wonderful. I get really excited. I've been trying to convince several of my clients to let me be their lackey as they travel around the country and around the world. I'll carry bags, I'll help you hitch up your trailer, even drive it for you. But they're doing some fun things in retirement, because retirement is supposed to be the next step in your life, the second half of your life. There's a great book out there by Bob Buford. It's called Halftime. And I encourage anyone that's thinking about retirement to pick that book up. It's Bob Buford, Halftime. We'll put that on our website in this next week. But Bob Buford talks about what our purpose is in life and what we will need to do in the second half of life. Because, folks, your vision of retirement is not going to be sitting in your bathrobe on the front porch in your rocking chair counting the cars go by. Or as my great science teacher in high school said, and eating a moon pie and drinking a grape knee high. So that's not what retirement's about. Retirement is about the second half of life, and what do you think God has in store for you? So you need to make sure that your retirement plan, and you need to have a plan. If you're just going to retire and have a bucket of money, that's not the way to work. You need to be working on this many years before you retire. I can't tell you the number of people that come in my office over the years that come in and say, I want to see if I've got enough money for retirement. And I ask them, okay, when are you thinking about retirement? And they say, oh, I just gave notice to Human Resources. Folks, that's not the way to do it. You've got to plan ahead, because we can help you make a good retirement of what you have. But if you don't know, you're flying blind, and that will create a wealth of worry. And we know what Scripture tells us about worrying. We are not to worry. We are to pray without ceasing. And we want you to pray without ceasing, but we want you to have a plan. We want you to commit that plan to the Lord and see what He has in store for you. So I'm excited about the new year. I am really happy to talk to you on the Spend Life Well show. I'm hopeful that Jesse will be back with us next week, all fully recovered and ready to have a little dialogue. If you ever have questions through the week, you can email us at radio@spendlifewell.com. That's radio@spendlifewell.com. Also, don't forget, join us on our webinar. We're going to be kicking that up in about 20 minutes at 9:15. You can go to spendlifewell.com/radio. You will see a link to past shows. You'll see some things that we talk about in previous shows. You'll also see our upcoming webinar. We have webinars about 2 or 3 times a month on different topics. We've got this one this morning. In a couple of weeks, we're going to be talking about how to maximize your Social Security. You can find all those things on our website at spendlifewell.com/radio. So as we wind up today's program, I am thankful that you've chosen to join us. I wish you the best in the coming new year. 2022 is going to be a great year. Hopefully it's not, as one of my friends said, it's not 2022 as in 2020 again. Hopefully we'll get beyond this stuff and really move out there and be able to get back into normal. If you've got questions, give us a call at 800-491-4508, 800-491-4508, or just, visit us at spendlifewell.com/radio, or just send us an email at radio@spendlifewell.com. God willing, we'll see you next week. We're thankful that you joined us today. Have a wonderful, blessed day.